Good day, ladies and gentlemen. So in my last video I talked about multiple time frame analysis and why it is very important, and I showed you this particular weekly time frame of Nasdaq, and I explained why you have this movement down into this space. I showed you that you actually have a fair value gap right there, which price was retracing to. Okay, you can see the fair value gap. The wick of this particular candle did not intersect with the wick of this candle, so this is the weekly time frame. Okay, so the wick of those candles don't intersect. I use the horizontal line to depict the fair value gap, and you can see price has entered the fair value gap and it's about to come out of it. So the way I'm looking at this price action, if let me go down to a lower time frame, this weekly time frame, let me go to daily time frame D1. Okay, now just trying to give you an idea of how I do some of my analysis. Look at this candle right here. This is Tuesday's candle. Okay, this is the small trading that took place on Sunday. Okay, that small blue candle. Then the second blue candle is Monday's candle. Okay, now if this Tuesday candle, which is this one, if it closes outside of the fair value gap, it's a very strong indication that we are going to the upside. Okay, so that gives you an idea of where price wants to go. If this Tuesday candle closes above that fair value gap, definitely you would expect Wednesday candle to give you a bullish direction also. That means the bias is going to be bullish. All right, let's go to a smaller time frame. Let's see M15. On M15 we already have candles closing above the fair value gap. Okay, so the indication is already lining up that we are about to enter a bullish period, okay, for this week. And if you go to 5 minutes time frame, you would notice that you even add a break of the top of the fair value gap and the retest of it, then it's bounced off. That gives you an idea that there is a bullish sentiment coming in. Okay, on the lower time frame we didn't just have a break, we have break and retest, and it bounced off of it. Okay, so that gives me a very strong indication that we are going into a bullish period. Okay, after a long time of price falling and falling and falling, you can see the way price has been falling. It has been falling, going lower, but right now it's about to start going higher. Okay, so on Wednesday, which is tomorrow, I would expect, let me go to daily time frame. I would expect Wednesday's candle, since the bias is bullish, Wednesday candle, when it opens, I would expect it to go down a bit. Okay, it's gonna go down a bit, then move up. So what we want to do is to buy it when it is low. Okay, when it is below its open price. You know, you have OHLC, when you're dealing with daily candles. In fact, any candle you're dealing with, there will always be OHLC. O stands for open, H stands for high, L stands for the low of the candle, then C stands for the close of the candle. So when you have a candle like this, something of this nature, and it's a bullish candle, it means right here is where the candle opened. This is your O. Okay, the high of the candle is the highest point the candle goes to. This is your H. The low of the candle is the lowest point the candle got to. That's your L. While your close is the last part the candle got to before it ended. So that's why it's called the close. Okay, so I would expect when price opens, since we are going bullish, I would expect price to come down to create a low. When it's coming down to create that low, just below this open, you can see the open right here. anywhere below the open is a good place for you to buy. Okay, so we are only interested in taking buy trades below the open. There are different strategies you can apply to take this trade. Okay, you can use the Fibonacci retracement strategy, which I taught. You fib the previous day, expect price to retrace either to 38%, 50%, before you take your buy. But wherever it's retracing to, you would need the position to be below the open of the particular candle you are dealing with. Okay, hope that makes sense. Okay, basically I just wanted to give you this analysis so you get an idea of how you can combine time frames. Okay, with time you are going to develop the skill and know exactly what to do and when to tweak it. Okay, analysis is not set in stone. There are some things I would see the market do that will make me want to rethink or recheck my analysis, okay, before taking my final decision. All right, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.